So now the right thing now is to, you have seen the structure were spelled out after we got the demand structure on the rally, and we had a break of structure at this level. On that break of structure, price had made a new high and came back to retest the structure, and they were giving an ascending trend line. And we have a breakout from a temporary descending trend line. Ordinarily, if buyers lost momentum, it would have been a case of price break here and start to return. But as long as on 30 minutes, buyers have on Friday broke above this structure, thereby keeping a breakout of a daily supply roof intact. So what price was doing was to seek a retest on a broken supply roof, and price have done that Saturday and came Sunday twice. This is the first touch and this is the last touch where it's coming on a double confluence. And you know, when trade has double confluence, it comes with a greater probability. So it's very common to see that analysis will be watched. It could be wrong, it could be right. I mean, you cannot tell 100% what the market will do next. But if we are to interpret the structure based on what the market is doing, this is what the structure looks like. Like you see, this is the floor. If I clone the floor and I take the structure to the roof, it gives me exactly the the price action which you want to see on the roof. So this gives us the hope and the impetus that price might likely travel up, but there is a clause. The last time price tried to climb above this structure was on Sunday, 5:30 precisely, and was stopped at this level. So what does this mean? That becomes a buy confirmation. So if you are skeptical of going long in this high, you you don't want to be caught in the liquidity sweep and you want to take precaution, then it's important to allow price break this structure. That is technically an inclined structure. It's not completely horizontal. So this structure has to be broken. If this structure is broken, then you can go long. If you're looking for buy confirmation on 30 minutes, yes, because this is trading, everything is probability, and the worst can happen when you least expect it. The worst can actually happen, and there is nothing you can do about it. Technically, nothing you can do about it. So there is nothing. So what we look at here is we want to see how the market breaks out from that structure. I want to see a breakout from this structure. We want to see a breakout. If that's not happening, then we've got some issue. We've got some issue. If that's not going to happen, then we really got an issue. If that's not going to happen, let's be very honest. So let's see what price I've done here. We have here, you can look critically, you will see that we have price create here a supply roof and a break of structure. Price returns here on demand 30-minute structure, and after we return here, price have gone on to make it look like it wants to do something great, but got stopped on Friday by 14:30 by exactly the height of the previous supply roof where price had already sold out, and they kept moving in the same demand structure, and up to Saturday we had the same structure, and it came on Sunday to potentially affirm that this 30-minute structure is valid, and we broke out of the structure on Sunday and price returned again by 9 a.m. and failed to break the structure. Now it becomes a litmus test for buy. So what this means is that you have to be patient if you are not already in this. These are for sniper entry for those who are already tracing this movement. If you are not here, you have to be patient, allow price to break the structure. If price breaks the structure and comes here, then you are going here. Straight up. This is where you're going to. It's most likely my land you above 97k. Yes, might. And if price comes to that level and fails to break it, then it doesn't call for quarter. Price will come down here, and if price comes down here and break that supporting descending, the ascending trend line, then it becomes a sell. This is how the market is structured. It does whatever it likes. So this is a very strong sell litmus test. So from the bottom side, this is our sell litmus test. So what this means is that if this structure is broken, once the structure is broken, there is nothing left. The market will have to sell down. And if the market is selling down, and you ask me, where should you look at opportunity for a buy to take advantage in that fall? It will be in this position. Yeah, it will be at this level. But if this happens, that means the bullish rally is technically over. That's what it means. So, or could just be that there is a lack of liquidity in the market. So let's see if the market managed to break that structure. A break above that structure will be a good time to see that we have not labored in vain and our analysis came out 100% as expected. But if that doesn't happen, the worst you expect is to see price come into the zone. And I also have another 30 minutes, another beautiful 30-minute structure playing by way of a descending trend line. So the market could technically want to leverage on this descending trend line for a buy confirmation. So if that happens, then most likely that this market might extend this friendship into this area in line with the descending trend line pattern. Trading is mathematics of pattern. And the most important thing in trading is your psychology. The moment you have an emotional issue, you have a psychological issue, do not trade. You can hardly win a trade because you'll be so anxious, you'll be very eager to win. And once you're eager to win, you become a loser. Winning is just winning. It has nothing to do with eager. It's something you do out of preparedness, out of knowledge, out of your expertise. So you don't be nervous to win. Winning is something already in you. So if your psychology is already messed, avoid trading. You are going to avoid trading as fast as possible. Otherwise, you're going to end up as a pathological loser you know. So this is what we see. And when you look at the structure, it's well spread out, and you see the market is avoiding the floor, it's avoiding the roof. So on this structure, this is our floor and this is our roof. Now, my prayer is, price, please get to this roof. If you get to this roof, then it would have made us a proud market structure specialist. But however, if it decides it's not coming here, and it comes to the floor, we are also right. So we have set a litmus test for buy and litmus test for sell. Litmus test for buy will be a break above the structure. If price breaks above the structure, it's a buy. And if price breaks above the structure, this one is a sell. There is nothing anyone can do about it on technical. There is nothing anyone can do about it. It's all about liquidity. So let's look at it and hope that this analysis come through. Shavyfxhub free BTC analysis. Feel free. Let me know what you think. Let me know your perspective, and give us a thumbs up if you see our chat. Give us a like to encourage us to continue to do this. After all, you're not paying us any money. This is free. You're not paying anything. So give us a thumbs up. If we are wrong, come to the comment section and say, oh, next level. Oh, you're wrong.